Stocks are trading up this morning as investors hope for positive corporate earnings. I'm Louise Story reporting for Business Day Live. Wouldn't you like it if some of your mortgage loan were forgiven? I'll be joined by a realtor in Phoenix to discuss the government's position on principal forgiveness. And Jenna Wortham, a technology reporter, will come on to talk about mobile app companies like Instagram, which is being sold to Facebook. But first, I'm joined by Times reporter Peter Evis to discuss the roller coaster we've been having in the stock market. Hi, Peter.
Hi, Louise.
Okay, so it looked like we were going off a cliff with stocks in the last few days, and this morning we're back up. What's going on?
Well, I think Europe is where we have to look for the reason. There was something said about by the ECB, they're willing to support Spanish bonds if they need to. That was what was investors' focus, and I think once they saw the support coming in from the ECB, they were like, okay, this isn't going to be horrible for a little while yet.
But just to review what happened overnight, Asia markets were down a lot. And then suddenly Europe opened and Europe went up, and now U.S. futures were up and then U.S. stocks are up. And so you think that this announcement in Europe turned it all?
Well, I think that was a big contributor. I also think that we were due for a little correction. What I mean by that is the markets were likely to rally a little bit after so many declines. And earnings season is happening now. Alcoa was pretty good.
They were yesterday.
They were
Alcoa.
yesterday, yeah. And I think that people are looking for some value around here.
Who do we have coming this week on earnings?
We have at the end of the week on Friday we have both J.P. Morgan and Wells Fargo, and they're reasonably strong banks, so we shouldn't see too many surprises there. But people are looking for.
They're looking for positive earnings from those banks.
Yes,
or?
Positive earnings, but any signs of any kind of revival in lending.
I see. I see. And what about in general with the rest of companies, consumer goods? Are we looking for positive earnings?
Yeah, definitely. I mean, especially some of the big industrial companies, and also in the tech space, which is hot right now.
Would you say that corporate earnings are driving the stock market more than the economic news, like that dismal employment figure we had last Friday? Which is driving the stock market more?
That's a great question. We're always having that interesting battle between, is it wider economic numbers, stuff going on in Europe, or is it just sort of the internal strength of U.S. corporations? Which one has the power to drive the market more? And it goes back and forth. And I think that so far this year it was like, okay, we can forget a little bit about economic bad news because the employment numbers were so good, and so people started to look at earnings and stocks started to look cheap. But now we're back into a phase where people are juggling both
because the economic numbers were weak.
Yeah.
The labor figures on Friday. Now
Right.
let's just take a little stock. Where are we in terms of the stock market when you look all the way back to 2007, before the recession? Have we regained ground, or where are we compared to 2007?
Well, of course, the market fell off a cliff during the crisis and has made back nearly all of that ground. And so it's down, I think, about, 5-6% since
April 2007.
Yeah.
Okay, but so we're still down, though,
we're still down,
from before
yeah.
the crisis.
Yeah, so that's not a good return if you've had money in the stock market.
Over 5 years.
Yes, if you'd had money in treasuries over that time, you would have done a lot better.
And what about versus the beginning of this year? Where are we?
We're only up about 8, only, it's a lot for the stock market, we're up 8%. And the market, to a lot of people still looks reasonably cheap. You've still got people very obsessed with Apple, so I could still see it going higher.
Okay, well, thanks so much for joining us, Peter.
You're welcome. Thanks.
Brett Barry has been a realtor in Phoenix since real estate was selling like hotcakes out there. He now helps sell empty homes for banks like Fannie Mae and Freddie Mac. He joins me now by Skype from Phoenix. Hi, Brett. We're here to talk about principal write-down, that's mortgage loan forgiveness.
Yes.
Yesterday, the regulator that oversees Fannie Mae and Freddie Mac said that he might consider principal forgiveness to be a good thing. This is a big change for Ed DeMarco, that regulator. And I just wanted to ask you, would this help the housing market out in Phoenix? Would this help?
In general right now, the housing market here in Phoenix is starting to strengthen. We're seeing multiple offers on homes. Personally, I think that the supply has dwindled greatly, and the reason for that is I think that the release of homes by various banks has dwindled. We've been waiting for principal reduction, or I have for about 5 years now, and frankly, I'm surprised that they haven't at least tested it on a large scale.
Well,
Louise.
you're right, Brett. I mean, it kind of feels like deja vu to me because I first met you a couple years ago out in Phoenix when the Obama administration was first talking about doing principal forgiveness 2 years ago. Back then, people in Phoenix were saying Some of them were very against it because it would be unfair if their neighbor got a loan forgiven and they didn't. Would you say that the sentiment of homeowners has changed at all versus a couple years ago?
Yeah, well, there really hasn't been a change on the ground here. I personally can't even name a single homeowner that I've met or known, and I meet a lot of people every week that's gotten a principal reduction.
No one.
Nothing on the ground has really changed, Louise, since we met 2 years ago.
Wow. So even though the Obama administration rolled out a test case out there in Phoenix a couple years ago that would do some principal forgiveness, you've seen no signs of any action.
Absolutely zero. And we've been waiting for any kind of a change. As a matter of fact, if the government really wanted to test this, frankly, why can't they test this in what they call cram downs in bankruptcy? So I really don't think the government has taken principal reductions seriously. We don't see it here on the ground, and we know a lot of people could probably be helped by that type of a feature.
Now, we had the Secretary of Housing, Sean Donovan, on Business Day Live about 6 weeks ago. He was talking about the big mortgage settlement with the banks, and as part of that, he said we'd be seeing some principal forgiveness and some action and help for homeowners. Have you seen anything happen in Phoenix with homeowners since that settlement?
No, we haven't seen anything since the settlement. Everything is what I read the same as you. Frankly, the average homeowner I meet here is probably about 80 to 100,000 or more underwater. Our prices here have dropped 50% in Phoenix. They're strengthening a little bit right now. That's just because of a low supply of homes. But frankly, I think that Ed DeMarco, FHFA, is kind of kicking the can down the road, or has been. Some of these people, it could take them 20 years, Louise, to catch up on their mortgages. And we know people have to move. There's a death in the family. There's a change of job. Maybe they want to move up to a different stage in their life. And we know, frankly, people are not going to stay in those homes. I don't care if you modify them or not. In a course of 10 or 20 years, people need to move.
So let me ask you, how often are you seeing a homeowner whose mortgage is much higher than the value of their home? How often do you see them just say, forget it, I'm walking away, I'm giving up on this loan? Or do you see more homeowners who keep paying?
Yeah, this has been going on for a long time here, about 5+ years. A lot of people are still walking away. I was listening to Mr. DeMarco's comments yesterday, and I read them, and frankly, he was saying they're afraid that people will, quote, strategically walk away.
But they're already doing that, right?
I'm sorry, say that again?
You're telling me they're already doing that, though, right? They're already walking away.
Oh, sure they are. And he's afraid that more people will do it if they offer principal reduction. But frankly, they haven't even tested it. If they really want to test this, let's roll it out, let's put it on a scale, and let's see what happens. But most people that I meet, Louise, consult with an attorney, and the last thing they want to do is walk away. I hear people all the time saying, this goes against every good bone in my body, but you know what? I'm put in a corner, I can't do anything else, and we want to move on with our life. And I see people at large companies here, which I won't name, and they just don't have an option because they have a corporate move and they've got to strategically walk away.
Well,
and
Brett,
frankly, I don't blame them.
Thank you so much for joining us. And hopefully we won't be back on 2 years from now still talking about these same issues. Thanks again. Facebook is paying $1 billion to buy a company that does not have a big presence on computers. Instead, it's a mobile-focused company. Jenna Wortham, a tech writer here, joins us to discuss the focus on mobile apps. Hey, Jenna.
Hi, Louise. How are you?
Thanks for coming on.
Thanks for having me.
So this is so interesting because you would think, a tech company would be all about their website. And what you wrote in your story today is that a lot of companies are just skipping the computer and designing things for cell phones. Tell us about some of those.
That's right. Well, smartphones have become so ubiquitous that it's much easier to build a self-contained social network just that resides solely on the mobile phone, which is a huge shift from years ago, where having a web presence was practically mandatory in order to get the message out to people that would use it.
And so what are some of the companies that are focusing on mobile apps rather than the computer?
Well, the main company we focused on was Instagram, which, as you know, Facebook bought for $1 billion. We also looked at Path, which is a social network that lets you share with a select group of your friends. There's Foursquare, which is a location-based check-in app. And there's a new service called EveryMe that we looked at, which looks at your address book and your Facebook friends and tries to figure out who you'd want to send pictures and share messages with.
So these are all consumer internet companies. They're making things for consumers, because the other thing we have going on right now in tech and the venture capital space is this push for big data, and that's really for companies that are crunching data. Are they looking at cell phones, or is this kind of a divergence, more consumer stuff on phones and more business stuff on computers?
Well, I think right now what we're seeing is a lot of interest in social networks, because we're sort of moving to an era where people like to share on the go, and if you're on a vacation and you're on the beach, you actually want to share the photo from the beach at that moment rather than wait till you get home and upload all the pictures to Facebook. So there's a lot of interest in apps that kind of facilitate that kind of behavior at the moment, but we'll probably see that shift down the line.
And so what about the big companies, Facebook and Google? Facebook was started as a computer-based website.
Right.
What are they doing for mobile apps?
Well, this is sort of their strategy in terms of future-proofing how they think people will use mobile phones in the future. I mean, we already know that Facebook, nearly half of their users access the site through a mobile phone, and right now their mobile presence is a bit weaker than it should be. So this is sort of how they're thinking about trying to make sure that they're ready for a mobile-centric future.
By buying this company?
By buying Instagram and trying to prepare in that sense, yeah.
But are the big players doing anything in-house, building in-house mobile features? What kind of things are they making?
Absolutely. I mean, all the big companies are trying to figure out what their mobile strategy is, but they're not as successful at it as a startup like Instagram has been. I mean, the smaller companies are sort of having a bit more success than the bigger companies at adapting to the future.
And now what about, in the mobile area, you have Apple with very prescribed rules around how Apple apps have to be, and then other systems like the Google-based systems are more open. I mean, is it challenging to break into the mobile area because you have to deal with all these different systems?
Well, it's actually even easier than starting a website and attracting an audience for it, because you have a built-in distribution mechanism. So
the phone.
The phone, exactly.
Or the iPad or the
iPad or an Android
tablet.
device. So you build your app, you release it, and instantly you're in an app store and you've got access to hundreds of millions of customers, which if you have a website, it's a lot harder to kind of get,
how do people find you?
Yeah,
how do they know about you?
Exactly.
That's an interesting change. Well, thanks so much for joining us.
Oh, my pleasure.
That's all for today. Please stay with us online at nytimes.com for our continuing coverage. I'm Louise Story, reporting for Business Day Live. Thanks for watching.